Now let's go right into the numbers. Looking at those numbers, analysts say better than expected, but we did see momentum slow down quarter on quarter. What exactly is the story behind this?
Thank you, Uche. This quarter just ended. Our results has come out very well. In the last 3 quarters, we've shown sustained good operating performance. The first quarter results, second quarter results, and the third quarter results have all been consistent in good operating results. What you'd find is that we have grown revenues across the network while keeping costs in check. For the first 3 quarters of the year, we have had improvements in all key balance sheet lines in terms of growth, and these have supported our top-line earnings. We've also noted about 22% year-on-year growth on non-interest income, as well as having our African subsidiaries growing their revenues by about 15% year-on-year. The whole of this has contributed to the operating results that has come out and well accepted by the analysts. However, the slow growth that is being referred to in Q3 is as a result of the fact that we've taken some impairment charges during the period.
Well, I mean, one thing that everybody's sort of talking about right now is the fact that, you know, with Air Nigeria's recent collapse, UBA is exposed to about 34 billion naira. Now, how does this reflect in these numbers and certainly in your numbers going forward? And certainly, what's your strategy to handle this? Any sale to AMCON, is a sale to AMCON in the books?
Well, Uche, what I can say at this time is that we're currently in discussions and in negotiations to see a final resolution of Air Nigeria. So I'm unable to say so much at this time, but what I can tell you is that we've assessed Air Nigeria for impairment, and we've taken impairment charge as is deemed necessary in these Q3 numbers.
Okay, well, let's talk about your loan growth. I mean, loan growth was certainly conservative, looking at it quarter on quarter. Loan to deposit ratio sharply down. We saw it go from around 49% to 43%. What are the reasons behind this, and certainly your strategy to boost this going forward?
Yeah, you find that we have a very strong history of maintaining very good levels of liquidity. Over the period, we've had significant growth in our deposits, and that has actually made the loan-to-deposit ratio to look a bit subdued. But in reality, we've had some decent growth in loans. We've had some repayments also, and we had some decent growth during the period. However, the very good level of growth in deposits has made the loan-to-deposit ratio to remain subdued at about 43%. We don't see the trend of loan-to-deposit ratio of less than 50% reversing in a very short term, but we also note opportunities in certain key sectors of the economy, and we should see some further advance of loans to these sectors going forward.
Now, in another area, one thing noted, net interest margins down to 5.9% from 6.1% in the first half. Can you explain really why we're seeing net interest margins going down? Certainly, I'm sure some of that Air Nigeria exposure is in there, but really, what is responsible for this?
Yeah, you'll find, if you look in the details of our accounts for the Q3, you'll find that we had some reasonable growth in foreign currency deposits, and these have been applied in foreign currency assets, which usually have lower earnings, if you like, lower yields than the typical local currency deposits.
Well, thank you.
That's the key factor that has, depressed the NIM slightly.